Well, we're back. It's been some random length of time, and Mike and I have returned for another edition of the TradersCircle Podcast. My name is Sam Green. I'm joined by Michael Corners.
Welcome, Sam. Good to be talking about what's going on in the world.
Absolutely, and there is an awful lot to talk about. I mean, obviously we've witnessed the craziness of Trump and the Israel-Iran war or conflict. That seems to have sort of wound down over the last few days. Yeah. There was a ceasefire somewhat agreed to yesterday.
I think for me, my perspective is that the world seems to be walking towards World War III. There's an underlying intent, seems to be an underlying aggression there. You can see that Israel is quite hell bent on helping getting America into a war to bomb Iran. It seems to be wider ambitions in the Middle East. We have Europe committing $40 billion of funding to support Ukraine to fight against Russia. So we seem to really be dividing into two regions. We have China, Russia, possibly Pakistan, North Korea, Iran, against the NATO, Israel, the US. So we expected these. We all expect these skirmishes to die down. Trump appeared to want peace, but then he comes out on the weekend and does the bombing target, encouraged by Israel, of course.
Yep.
It seems just going to be an endless cycle. I don't know what will satisfy Israel other than a massive fight.
Yeah, no, neither do I. And I think, there's obviously a lot of talk about Iran being on the brink of having nuclear weapons, but they've been on the supposed brink for a very long time.
About 20 or 30 years, and tell me it doesn't sound like the story of weapons of mass destruction.
It certainly does. And I also think that Iran has sort of positioned themselves to be a so-called threshold state where they saw, internationally political advantage from, being on the brink of being able to develop a weapon without actually developing one. Because I think they sort of always knew that developing one could lead to, the downfall of the regime and whatnot. I also think there's a large element of domestic politics involved in Israel's decision to attack Iran. And that is, Netanyahu's government had just survived a no-confidence motion, and that by engaging in this conflict, they're able to stave off those no-confidence votes for a period of time. And so I think part of it was for domestic consumption, to try and achieve more public support for the Netanyahu coalition, and then also to avoid having further parliamentary no-confidence votes.
It just seems that these ongoing skirmishes have been protracted on, going for decades. I mean,
well, that's true as well.
And as we were talking today, America has not been in a successful war since World War II. I mean, Korea and North Korea and Vietnam and Afghanistan and the weapons of mass destruction take out Iraq, take out Libya. And what have they left behind? They haven't had a lot of victories.
No, I mean, you could maybe argue that the Syrian civil war was a victory for them, although it came after they left pretty much.
Yeah, it seems to be heading down one path.
Yeah.
And look, Iran has got close ties to China and Russia. Pipeline, albeit they talk about the Straits of Hormuz being closed down. Pipelines are going from Iran across to China, so China's going to protect that.
Yeah, absolutely, and I think that means that the Strait of Hormuz won't be closed. 50% of Chinese oil demand goes through those straits, and only 5% of the US oil demand. So even though it would be devastating for the oil price and bad for the US economy, Iran would never do it because it would antagonize China more.
Yeah. And if straits close, 20% of oil goes through there, I think, thereabouts. I mean,
yeah, about a quarter.
The price of oil, $150.
Oh, it'd skyrocket. I mean, you get speculators moving in.
Yeah, I know. I suppose from a trading point of view, from an investment point of view, I think it seems just to be an inevitability about this, and it might be happen by next year.
I personally don't take that view, and perhaps differing views. I honestly believe Trump doesn't want more conflict. I know there's plenty of people around him, and including a huge contingent of Washington Republicans who've pushed for war against Iran for a long time. But I actually do believe Trump on the one thing that I don't believe him on 99% of things, but I do believe he doesn't really want conflict.
Yeah, unfortunately, I think you hit the nail on the head. I think there is that deep state, the John Boltons of the world. They've
been salivating over a war with Iran.
They want a war. They need a war.
50 years.
They've got a defence industry that thrives on war. Any money going to Ukraine comes back to the US defence suppliers. And can America actually survive a fight against Iran? I mean,
I don't think America would survive another Afghanistan or Iraq, not without a huge societal change.
Well, your big thing is that the encouragement from Israel and the American Republicans is boots on the ground. Good luck with that. The Americans, I don't think, will swallow.
No, I don't think so at all. And, I don't think Trump would go for it. To be honest, the only reason I think he attacked Iran over the weekend was because people told him how cool the bunker busting bombs and the B-2 B-2 bombers are. I'm serious. So in 1304, there was a siege at a castle in northern England or in Scotland. And they built the world's biggest trebuchet. It was 40 feet tall. And at the side of the trebuchet, the people being besieged surrendered before it got to fire. Yeah. But the sieging forces actually fired it off anyway after the surrender because they just wanted to see what it would do. That was called the War Wolf. It's the same story with Trump with his B-2 bombers dropping 30-ton bunker busting bombs. He wanted to see those bombs go off. Yeah. He just wanted to see what it could do. Yeah. He didn't want a conflict. He just wanted to see his cool bits of tech do their thing.
Yeah, sounds very similar to the atomic bombs dropped. I mean, did they really have to drop it on 100,000 people?
Yeah, well, did they need the second one as well?
Did they need the second one? I think there are obviously rising tensions, but I'll still go back to the point. I just think the deep-seated interests there's inevitability about an escalation. Europe, passing the hat around and getting $40 billion together, just announced, I think, last couple of days, to fund Ukraine's fight against Russia. That's just a war that probably you'd expect Trump to come in and solve it, but I think he has such a hard time against his right wing.
Yeah, well, I don't think that's the issue with the Ukrainian conflict solution. I think that's more of a Russian issue. Russia has stated goals. I don't think they'd accept, much less than the current borders.
I think it integrates into the whole region. I mean, Russia is close to the Middle East. Russia was supporting Syria. They're supporting Iran. So it's. I think there's a lot of things we don't know what's going on.
No, that's true. That's true.
And even I think the bombing on the weekend, as much as Trump loves to come out and do his press release and say, "Well, those big beautiful bombs were dropped," I wouldn't be surprised if they signalled ahead of time that they were going to drop that. Likely. There's not a lot of proof that much damage has been done. But again, this is a war of misinformation. Yep. I don't think we particularly really know what's going on, other than the general feel that the feeling I get from just talking to people is there's great unease out there, and people are ready to run out of the market, but I better stay in there just in case it has another 10% run.
Well, an interesting thing is, after the Israel-Iran war started, after Israel started attacking Iran, the Israeli stock market rose, I think for about 5 days straight. The German stock markets had a series of all-time highs. A lot of global markets are actually running higher with the conflict. Yeah. Now, these stock markets have large amounts of defence-related stocks on them.
Well, that's the point, isn't it? It's going to be $100 billion running into the defence stocks that will filter down into the economy as more jobs and more things are being bought.
Yep, but I also think it's an example, obviously a very sort of obvious example of how important government money, government spending is for markets at the moment.
I think I saw a chart the other day about our economy in Australia is that the biggest participant in our economy is our government, growing at 5.8%.
Only getting bigger.
Only getting bigger, and private enterprise is in the low 1% growth range. The government's getting too big in Australia.
Yep, it's even worse in the US. Yep. I think it's about 30-something% of their economy.
Exactly.
Their deficit is 7% of their economy. The government interest is equivalent to about 3.5% of their economy.
100% is $1 trillion in interest. One divided by 7 trillion expenditure. You're up there.
It's crazy.
And what can't get paid back won't get paid back.
Yeah, and that's probably, I think, what from a medium to longer term perspective markets should be focused on. But until the music stops, that's going to keep pushing them higher.
Yeah, the problem is the music stops on a Friday night, and we come in on Monday and the market drops 500 points like it did a couple of months ago. And I think people are feeling that stress.
Yep.
If you got the baby boomers, the great blob of population just into retirement, they're looking at their equity portfolio. They weren't happy when the market dropped to 71 because they took their retirement savings down by 15%.
Yep.
So,
and I think those moves are going to happen more frequently, more severely. Larger moves more frequently, and probably even quicker. They're going to happen over a shorter period of time.
It's interesting. You made the comment during the week. This market, it's very hard to trade the fundamentals. I mean, you got the Commonwealth Bank. $190 today.
Yeah, yep.
The fundamentals are out the door. What we're trading on is momentum, passive investing. Where else does this money go?
Yep, absolutely. I think, every aspect of society, the market included, has gone completely to short-termism.
Yeah.
They no longer really care about the future. And, you speak to young people out there, 20-year-olds, 25-year-olds and younger, they don't have any positive view of what the future is going to look like. They have no hope of what the future is going to look like. Everything about their generation and everything about politics at the moment, everything about the market at the moment is purely focused on the next sort of week or the next month.
Next 5 minutes.
Yeah, or the next 5 minutes.
Yeah, so the people at 35 or under, their great white hope is their crypto stocks, their crypto holdings will go up in value. The people over 55 are hoping the share market can keep up another 10 or 20% and their house price doubles in 10 years. There's all this great hope everywhere.
And the people buying CBA at $192 per share, they're not necessarily going, CBA is going to grow its earnings, for the next 3 years. They're going, CBA is going to go to $200 per share. That's simply it.
I remember in the GFC, CBA I think was around, it was trading around $50. I think it got as low as 38, which wasn't too bad. Commonwealth Bank being a popular stock. I remember National Bank was $40 at the time. National Bank still $38. It's gone sideways in over 18 years, and Commonwealth Bank's gone from a low of 38 up to $190. So Commonwealth Bank is definitely the star.
Yep, absolutely. It's doubled over the last 3 years, doubled in share price on flat earnings, relatively flat earnings.
Yeah. But it really depends on a somewhat healthy housing market, I think.
It does. And that's another thing I wanted to touch on, an aspect of the Australian economy that I think hurts us as a nation. It's a pretty unproductive capital sink. Everyone pops all their potential investment money into a house, and there's no great production that comes out of it, and that's where all the Australian money goes.
Yeah, all that capital. Well, the great chunk of our savings are sitting in superannuation, whatever that is. The moment $3.5 trillion, predominantly managed by the big fund managers and the big super funds, and they're out there buying monopoly assets, roads, tolls. ports,
utilities,
airlines. They're controlling these big swags of assets that have got a monopoly profit coming from the economy. But what are we doing? What's the small businessman doing?
Yeah.
The old growth engine of the economy. We're getting choked by taxation.
Yeah, it's only rent seekers out there.
Only rent seekers.
There's no real, productive growth. And, you look at all the comments from the Productivity Commission and, government and the financial papers and things like that. We just don't reward it in this country. We don't create systems to support it.
Yeah.
Instead, we give people incentives to invest in things like housing. Crazy. Crazy. And then we wonder, why we can't grow our economy.
Well, it's funny the other day.
I wonder why.
A friend of a friend, their son said, can we talk to you? Can you know anything about the Victorian housing scheme? So the Victorian government was giving the 25% deposit out, and we've known a couple of people taking advantage of that. And so the government, up to 950,000, will give you 25%. The Victorian government will give you 25% of that. Well, is that how much we have to subsidise housing to get people into that market? But the Victorian scheme expires 30th of June. It expires this week because the federal government has announced their scheme of giving you 40% of the house value on a new home and giving you 30% of the house value on an existing home. Details of that scheme haven't really come out, but I mean, have we come to that we have to subsidise the cost of the housing by 30% for young people? Just to keep this bottom layer of the pyramid moving up.
Yeah, absolutely, and it is a pyramid.
It's nuts,
and it's just going to push prices up by that amount.
Yeah.
I'm not a fan of how this issue has been managed. I don't think anyone is, other than those owning dozens of properties. But even then, they kind of need it to keep going.
Well, have to feed the pyramid.
Yeah, there's only so much more it can be pumped up. Let's just put it that way.
Well, we're one of the most, if not the most expensive housing market. We all know that, and we all complain about it. And I always finish off by saying, stop complaining. What the hell are we going to do about it? But looking at the class of politicians we've got, they all manage to speak about nothing.
Yeah.
And you think they're doing something. I was listening to the ABC 7:30 report last night, and the interviewer was saying, well, why is Australia supporting all these attacks on Iran or whatever need resolutions from the United Nations? Why are we doing things illegally? And of course, nobody can answer that. It seems to be Trump is doing what he feels is justified, but we're not following the rule of law.
No.
And once society moves away from the rule of law, where the people struggling have to follow the rules, but the people empowered don't have to follow the rules, people are going, it doesn't sound fair.
Yep, absolutely. It's the little guy gets all the enforcement of the law, but none of the protections, and the big guy gets none of the enforcement, but all the protections.
Yeah, and another traffic cameras in New South Wales, the 1st of July, instead of measuring your speed, they'll measure your speed over a distance.
Oh, average speed cameras.
Average speeds, you can up to, I think, several $1,000 fine and 6.6 demerit points. I mean, the government is just very much controlling us, I think.
Mm-hmm. Yep.
Anyway, we should get off that. But look, I think it's like when we talk about investing, we're looking for a much more vibrant economy in Australia. I don't think we're feeling it.
No, not at the moment.
People don't want to take chances. There's a lot of small businesses we see out there trying to raise their seed capital funding, and good on them for giving it a go. But it's hard work to raise money for small companies. Money seems to drift off into those big passive investments. The economy does seem to be losing a little bit of drive.
Absolutely, back to a per capita recession pretty much, only propped up by very large amounts of immigration, and even then barely propped up by it.
What I do internally is I track the government, the revenue and expenditures. They put out a report each month, and I've just been maintaining a database for quite a while, so I can track the components of government revenue, which is individual taxation, you've got company taxation, you've got superannuation funds tax, you've got the federal government collects the GST, which they obviously send back to the states. There's excise duty, customs duty, but I've put a few slides together, and I think they'll be popping up on your screen at the moment. But just looking at the components of revenue, and just I want to give you a picture of what the economy looked like from a revenue point of view. A big picture too is, and announced over the last week, is that the percentage of taxation paid for by individuals has gone from 23-24% up to now 28-29% of total tax take. So the economy is really leaning on the individual taxpayer, and you probably can feel it. The increased taxes, like the HEC schemes changed from a flat 5% to I think 15% over earnings of $60,000, stuff like that. And they're introducing the unrealised capital gains tax, and don't let us start on the super balances, on the stupidity of that. Just how you measure it. I'm not against raising taxation, but the point is that the government has recognised, or has stated, Chalmers has stated that, listen, we're looking at deficits for the next 10 years, and therefore I'm putting back on the table all the things we haven't done over the past years, which includes, they're going to look at negative gearing again.
I think they should.
And they should. You get 100% deduction today, and you pay something back maybe in 20 years' time. It's not the best idea. We subsidise superannuation. We subsidise investment. But just to put up the first slide.
I think, to interrupt, I think one thing they could tax more is resource extraction.
When you go to most countries in the world, you have to supply the local economy at a reasonable price, at a subsidised price, before something's exported.
Yep.
So it's reserving. West Australia reserves gas. I mean, so in Australia, we're competing. We import gas. In
Iran, when they first made the oil deal with it's the British government, but as a gentleman whose name escapes me, some entrepreneur, they were entitled to 16% of the oil and gas that was produced in Iranian oil fields. They were given for free, and that deal was viewed as so disadvantageous for Iran that it basically led to a series of regime changes in the situation they're in now. Imagine if we were to get 16% of our resources. That's 16 times what we're getting at many.
But I think
infinite times.
I think at that time that was enacted, and we're going back at least 80 years ago. I think the British came in as they were carving up the Middle East. They offered Iran that deal, and the point we might make is, did they have a choice? And they didn't offer what they offered. The House of Saud, which is now Saudi Arabia, I think they offered them £5,000 a month, which was a lot of money back in those days, and they took that deal, and hence we have Saudi Arabia nowadays. So.
But I was just going to say that those exploitative deals, which were viewed as just terrible for the host countries, are way better than what we're getting on, gas extraction on federal lands, for example, in Australia. It's crazy. It's just crazy.
Well, and vested interests, and ex-government ministers are now working for the companies, taking advantage of it. Yep. So we sound like we complain a lot, don't we? But anyway, the first slide has just got the growth rate of individual personal income taxation, the annual growth rate. So you can see that we went into the COVID into 2020-21, and individual taxation really crashed economy. But then we had the massive government subsidies come out, and government taxation for individuals grew up to about 14%. What I'm pointing out from the slide is just saying that the growth in individual taxation is getting close down to 2%, and possibly will go into zero territory. And you've got to keep any of these revenue growth rates in mind with, we'll have a slide later, on government expenditure. The other side of the coin is currently growing at 7%. So the government to even on these current numbers, the government's running a deficit, and the revenue is slowing down, but the expenditure is growing at 7%. But staying on these numbers, so individual growth rates are falling away. Looking at the company tax rates, you saw the COVID boom up above 30%, and currently it's the company tax is hovering around that that 1-2%. Again, it needs to come up with an expenditure growth rate of 7%. Moving forward, I've took a couple of the smaller items of the goods and services tax. So the state governments can't tax in Australia, so the federal government collects the GST. And I put the GST in there, the blue line, and I put the wine equalisation tax, tax the things we enjoy. So interestingly, I find this interesting. It's not a big number in the budget, but the wine tax has gone from a 10% growth rate down to a negative 5% growth rate. It just shows an indication of consumption in Australia, people cutting back. Goods and services tax, you can see the blue line. We peaked at the big numbers of 15% growth, and now we're tracking just a touch under the 5%. And you imagine GST is a great bellwether for everything we buy, except some medical and education.
Yep.
So it's a good indication of a slowing consumer.
Yep. And you could probably say at the moment about half of that is price increases, so inflation, and then maybe the other half is population growth.
These are all nominal numbers.
Yeah.
You take out inflation out of these numbers, and we got contraction on a real basis. Moving along to the next slide, you see the luxury car tax has solidly moved into a negative 10% annual growth rate on luxury cars, no doubt due to, one, the consumer's hip pocket, and the fact that I think the Chinese are coming in with a lot more affordable cars.
Yep, absolutely.
under that $90,000 threshold. The excise duty, so the excise duty, which is getting close to that 0% level. Excise is alcohol, tobacco. A packet of cigarettes costs $60, and I think 50 cents out of every litre goes to the government out of your petrol tank. The government's having particular problems with tobacco at the moment because the one reason that number's going down is because those high tax rates is similar to the prohibition in the US. It's encouraged a massive illegal market, and people prefer to pay $10, $15 for a legal cigarettes than $60 just for their smoking habit. Customs duty. This is the Trump. We went out there and we said we don't have tariffs. We do have tariffs. It's called customs duty. Everything comes into Australia gets taxed at 5%. There are some exceptions if they're not manufactured in Australia, but so our tariff is 5%, which Trump was happy to point out. And so any imports coming into Australia have to pay 5% customs and 10% GST. And you can see that customs duty is, the stuff we import is hitting around the negative 20% annual growth rate. So to me, it looks like a contracting economy on a few of those taxation levels. And just our final slide there. On the other side of the coin, we go from revenue, we go to the expenditure side, and you can see on the expenditure side, around the COVID time, we boosted the expenditure by 30%, and we handed out all the money to small business and all the schemes. But we've solidly recovered to currently, as I mentioned before, growing at that 7% rate. So the government, Chalmers really he has to think of some ways to raise taxation, and the way they keep these sacred cows which they won't touch, they won't put more tax on resource extraction. They'll be coming for the what people will perceive as the little bloke, the little investor. Anybody who's got land, you can't hide your block of land. So they'll, whatever new taxes they can think of on property. So I think the individuals are saying, well, we're seeing all these tax squeeze happening. Where's our growth? Where's the government incentives? So I think it's a bit negative out there.
Yeah, I agree as well. And it's the burden always falls on the little guy, and it looks like it's going to be the same case again. Rather than start lifting the taxes on corporations, start trying to adequately tax foreign corporations or large mega corporations, trying to tax resource extraction, it's going to, continue to suppress the small guy. The share of wealth in the bottom 90% continues to fall. It's only going to probably get worse. They're the easy target. They don't have the political power to fight back.
So it comes back to, at the end of the day, how are you investing? And I think we're seeing things a lot more cautious, like getting a lot more inquiry on fixed interest, on solid returns. The hybrid market's returning around 6%. Subordinated debt, a little bit less, but you can get 1.62% over the cash rate. People are looking for some safety. I think because the investment market tends to be passive because of all the ETFs and how the super funds manage, I think those big stocks see the flow. But the problem, I think, the catalyst for Australia will probably be if the unemployment rate moves up into that 4.5-5 range.
Yep, absolutely. I mean, things are sort of so finely poised at the moment that I don't think it'll take much economic disruption to really throw a spanner into our economy. We saw a pretty poor unemployment read for last month, with 8,000 full-time jobs created, well below what's necessary. And
again, if you take the government numbers out there, it'll be in dire straits.
It'll be absolutely dire.
The Victorian government doing their expenditure on all the roadworks and all the public works. If that ever stopped, most of the tradies would be looking for a new job.
Yeah, the Victorian economy would collapse. It's not great out there. Things will change, but in the short term, I think it's probably going to get a bit worse before it gets better.
So I mean, where we're at is, personally, at a stage of caution. My investments focus on very, very strong fundamentals and good growth prospects in the small cap space. They are out there. The bigger companies, the valuations, I think, on the big stuff's a bit stretched.
It depends. Yeah, some parts of the market, yes, some parts less so. But those ones that aren't stretched aren't probably going to get any love anytime soon. It's just the nature of the market and the short termism at the moment.
Yeah. So, and of course, with increasing debt from the US, which doesn't seem to stop, we got the story of what's the replacement for the US dollar. We come back to gold. You're bullish on gold?
I would be further bullish on gold. I can't really see it coming off much. I think there's some good value gold miners out there as well.
Money's come back into GDX, I think.
Yeah, absolutely. And the dynamics that have pushed gold up to where it is now, we're going to keep pushing it further for sure.
Interesting, the silver gold ratio got out to about 100 to 1. I think it's about 90 at the moment. Silver seems to not unloved in the early part of the cycle.
Yeah, I don't
like it, do you?
No, it's a similar story to crypto. Why would you go for second best? And there are industrial uses for silver, and it's being consumed in chemicals and things like that. But it's not, the large central banks, they're buying bricks of gold to put in their vault. And I'm sure they've got other metals, but the vaults are filled with gold.
Short term, I think the commodities can be a negative story, but in the long term, a lot of it, we're in shortages everywhere.
Oh, huge shortages. We're going to have massive shortages of copper, probably of aluminium as well. It'll be suppressed for the short term with the tariff situation of a clear slowing of the Chinese economy. But in the more medium to longer term, there just isn't enough of these metals on the face of the planet.
Yeah, I mean, Trump sort of wants oil prices around $55 for West Texas. We jumped over $80 on the weekend. It's back down again, which I think is a good barometer of the near term.
Yep.
Volatility, but oil probably will. I always believe it will float back to 55 because that's actually where Trump wants it.
Yep.
And I think it's probably what stops him from doing. He'd be more open to a fight but he knows oil will go through $100.
Absolutely. I think with oil, over time, it's gotten a lot more. The supply's gotten a lot more elastic, and so when we do see the prices spike up, a lot of supply comes online, and there's a lot of supply in the US that's ready to be turned on to benefit from higher prices. They can now export a lot of the gas as well a lot easier. They've built import facilities in Europe and stuff.
Yeah, correct.
And so it as the prices go up, you see supply increase, and then it comes back down. The supply comes back off.
And in the past, the gas coming off as a byproduct from oil drilling, was just burnt off. Couldn't do much with it. Couldn't give it away. But a lot of deals are being signed now to use the gas offsets to power up AI, data centers. I think there's going to be a lot of elasticity between gas and oil. It's at the end of the day you need energy, and the scientists, as they say, are smart enough to, if there's a shortage of oil, they can substitute going for gas. People, when the gas prices were $3, which was equivalent to about $15 a barrel of oil, a lot of truck companies in the US start switching from switching to gas, to gas fuel. So I mean, there are substitutes there, but I think there's such going to be a massive demand for AI and powering of data centres that activity in that space will be very attractive.
Yep, absolutely. Probably gone for quite some time now, so I think we will end it on that note. Emphasis on short-termism in just about every factor of life: the market, politics. International politics, and that leaves the market vulnerable. Short-term spikes, large movements, and got to be on the ball these days.
People are very cautiously bullish, but they'll pull the trigger on a bear signal pretty quick. So,
absolutely.
So it'll be the out of the money long-dated puts that might have some value.
Absolutely.
Yeah.
All right, we'll wrap it up there. Hopefully you guys enjoyed. If you did, click the like button, click subscribe, maybe leave us a comment, and we'll see you guys next time.
Take care.